Good morning, everyone, and welcome to the European crossover webinar and also to post ECB day. We're seeing the dollar index pressing up against this major level 97.89. Obviously, the euro is has had quite the turnaround back on the downside. When we saw this pressing this morning or yesterday morning, it seemed that they would want to break 111. We also found out there was $20 billion of an options that actually worked as a barrier to do just that, keep it from falling. And we saw quite, the reversal, not a huge reversal. We did see a reversal, but that reversal did, pare back, and hence here we are. And as we move in towards the next big event, which is going to be FOMC, my thoughts are, as I mentioned, I'm no fan of the dollar, but you got to give it its due. And, potentially with the 25 basis points priced in, I wouldn't be surprised to see the dollar go to new highs at the in spitting in the face of the FOMC, cutting 25 basis points. And certainly that looks like that's a possibility. Canadian dollar, we've been talking about that. The next area that I'm looking for to get to is the 31.90. Certainly looks like it wants to get there. We'd had that challenge up to the 31.62. You can see here a pullback. We talked about bids at 31.20. Market held that, missed it by just 2 pips, and then we rallied, came back to test it, went just below it, and rallied back up, came back, tested just below it, rallied back up, and here we are up and away. Looks like we're going to 131.90. Dollar yen is still hanging around here. I've got an area here myself at 881, but this potential with this dollar, got to be careful. This thing can push higher. We've certainly put a squeeze on some people that I think may have been complacent. We talked about this going up here, and as we've gone up at this point, I don't think we've squeezed enough. I don't think we've gone high enough to actually squeeze people in any respect whatsoever. So anybody that may have said, I think we're going to roll over, and they're in the, let's say, 810 area, they're under some trouble. But there may have been some people that said, I'll take on this market right here at 835 again, which it's already hit multiple times, and they might be, obviously they're under pressure by about 50 pips. We had our bias chart resistance yesterday at 850 because we said, even though we've been tagging this 833, we thought, the real pressure would come here, would be at 850. Well, we just pushed beyond that, and I think we can get easily to the 880. And be careful next week as we get to FOMC. We can just see this dollar keep pushing, and you may just see some folks just kind of yield and give in from this point. Let's go on and move. Gold's still weaker here. And you can see the Aussie continues to remain under pressure. Wow, look at this, because this is a key area here, the 69.44, and we continue to lose. Obviously, the RBA opening to cutting rates and further potentially. And as I mentioned, China also helped kick the market down the stairs when they said, hey, if the Fed cuts their rates, they're not going to move in lockstep. They're comfortable exactly where they're at right now. Their words being comfortable. So that's the deal there. Peso, we saw that sell off quite a bit in the chat room. I talked about this 1898 holding. We have held. We saw the market, come back from that, the brink of this, and boy, it looks like, saw that pair going and come back again, and we've kind of like languished back in here, kind of slid back here. I think the resistance comes in right at this 1908, but the 1898 held. I think we knocked a lot of people out of their positions, and boy, that has to be frustrating. I know for myself, I remember, as I mentioned, I had got, what was it, I guess back here, let's see, what was it? I guess it was here, I think, where I came in at a good level. I think it came in at 02, and then just below 19, I got stopped out here, and then we just see this market rally up. I wanted to turn around thinking, and actually, it might have been here. No, it was here, because I remember thinking, as it started to work hard, like I'm not going to jump back in it, and then see us all come all the way back. I'm like, oh well. And then I think some people ended up giving up quite a bit of gains as they rode this thing all the way back down. But I shared in there and posted the chart. Hey, I'm looking for the 1898 to hold. And actually, the level was just below that. It was 18,975. But you know, okay, we're going to take a venture real quickly with the cross rates. Well, the euro continues to push up a little bit higher. Obviously, euro remains weak, but the Aussie is weak across the board overall. Same thing with the sterling versus the odd. Remember, we generated this. We got a buy signal several days ago, 4 days. I think it was 4 days ago, and that certainly has seen this market. We talked about it at the time. We're saying, hey, we're getting a buy signal here with these exponential moving averages, and that has really allowed this market to really come back in light of the cable to a certain extent stabilizing. Certainly isn't doing it against the pound, or not in the pound versus the dollar, but and then on top of that, with the weakness in Australian dollar, allowed this sterling now to go on and rally back up. We're seeing the Australian yen obviously continues to remain under pressure, but albeit in a very, very tight range. We're going to move into the and after posting this gravestone doji several days ago, it's been just a slow descent here with the Kiwi yen. Um, Euro yen had its little foray up on the upside, but it's since weakened. Obviously, the weakness of the euro is really going across the board if you think about it. But obviously, we're seeing a little bit the euro. We're seeing more weakness in the Aussie versus the overall weakness of the euro. Hence, we're just edging up just a bit higher. Let's go on and take a look. Be just one moment at today's data. We did have Italian consumer confidence. Nice, good looking, good number. And that's what I'm saying. Is the odd thing is that as weak as Germany's been, and as weak as Germany's been, and look, export price, the same thing, just continues to just go down, down, down like the submarine horn. Uh, France has been okay, although we did see some. Look at this 102 consumer confidence. We did see a little bit of I think on the PMI, a little bit weakness here also in France, but Germany's been leading the way lower, and France and to a surprising extent, Italy has done well. And like I said, we came in here at 100.1. Obviously, Reuters poll even had them push a little bit higher, but overall, it's held relatively well, if you think about that. And we do have GDP coming up in the States. That'll be 8:30 Eastern. And let's take a look here. Mexican economic activity at 9 a.m. Eastern. Obviously, I'm in the Central Time, so these times are set for Central, so it'll be 1 hour up as far as the Eastern. We do have Canadian budget balance. That'll be at 11 a.m. Eastern. So obviously the big driver will be the GDP, but once again, I'll probably see that number even stronger. That's probably just going to put a little bit more pressure here with the dollar on the upside. With that, we'll go on and take a look at the news, and then we'll get into the bias chart. ECB's Draghi, whatever it takes, part two, or I'm saying in French, part deux. But anyway, ECB increasingly suggestive language on imminent rate cuts for their stimulus, and even the assertion yesterday that it would let inflation breach the brink. Yeah, exactly, whatever. Official 2% target were officially not enough to satisfy those in the market seeking cheaper money right now. ECB President Mario Draghi did his best at the news conference, and I got to give him that. He certainly did, to drop even heavier hints of easing to come. And sources close to the bank weighed in later with promises that a September rate cut was almost a dead certainty. Finally, the barrage of messages managed to get through, with many are now pricing a 10 basis point cut in September. Yet, when the limited tools in the disposal of the ECB can kickstart the alien Eurozone is another matter altogether. With rates already so low, the law of diminishing returns applies to further cuts, while the ECB is simply running out of things to buy in its QE program as currently designed. With a strong majority of economists polled by Reuters now saying a deeper global slowdown is in the cards, the challenge facing Draghi is in his final weeks before handing over to Christine Lagarde is considerable. I did see about Sanchez in Spain, about not enough votes to establish the government. I saw that previously yesterday, and we're going to spend any more time on that. Yesterday turned out to be a disappointment for the markets, with the ECB failing to raise interest rates, and in Wall Street, I don't know what they meant, failing to raise interest rates. Obviously, yeah. Well, the surprise would have been because they didn't cut, because then that would have given risk on a little bit for the move. So I'm not saying no one expected them to raise rates. And Wall Street knocked off record highs by some lackluster company earnings. It might brighten up lower for several companies that announced results after the U.S. market closed, beat expectations in after-hours trade. Google parent Alphabet jumped 7.9%, Intel 1%, Starbucks 6.6%. Amazon, however, dipped 1.6% on its first profit miss in 2 years. A comment implied discord within the council, as well as hints that the economy was not as weak as it seemed, pushed currency and bond and stock markets to reverse initial knee-jerk moves. Nor is the euro lifted by a Reuters source-based story that September cut was a done deal. The Eurozone bond yields are slipped again today, but off the lows of yesterday. German yields, for instance, are down 1.5 basis points at minus 38. Europe's data calendar is in thin today, with the just consumer confidence numbers due from France and Germany. We saw that. But in the United States, we do get flash GDP figures and are expected to show growth of 1.8% in April, June to quarter. From April to April to June's quarter. The slowest in more than 2 years. People will be watching the numbers anxiously, given the Fed's meets next week, and easing expectations have already been tempered from 50 to 25 basis points. A strong figure today, coming in after yesterday's robust new capital goods orders, could paint a picture of an economy chugging along nicely and force markets to reassess their cut expectations for 3 Fed cuts in 2019. The rate cutting cycle is extended far and wide, and it talks about Turkey doing their own cut. And let's see here, is it there? And the dollar near a 2-week high versus the yen, euro steady as traders trim rate cut views. The dollar stayed near a 2-week high versus the yen on Friday as investors paired expectations for aggressive federal interest rate cuts. The euro held gains after the ECB. I don't know about that held gains. I don't know what they're looking at. Kept policy unchanged, disappointing some market participants who had been bet on easing. In addition to bouncing treasury yields and data on Thursday showing a surge in U.S. capital goods, provided more reason for traders to reconsider expectations for global monetary easing. With no major event in Asia on Friday, investors are also likely to look to U.S. economic data later in the day. The Fed is widely expected to cut rates, but there are growing views such as the move may be a one-off event, not the start of a major easing cycle. The market had gotten ahead of itself with expectations of rate cuts, and now we're starting to correct it, said Takuya Kanda. This is supported for the dollar and also means it's difficult to test the euro's downside at these levels. The dollar traded at 108.62 yen near 2-week high of 108.75. Yes, a basket of six currencies. The index was at 97.76. We're seeing that even higher now. Fed's widely expected to lower its target range of 2.25 to 250 by 25 basis points. Before the meeting ends, the BOJ announces its policy decision on July the 30th. Central bank officials are divided on whether to ease policy, but some argue there's no immediate need. After the ECB meeting, Mario Draghi indicated the bank was prepared to cut rates at its next one in September and consider the options for easing. Government bond purchases and revamped policy message are also likely at the ECB's next meeting. And with that, I was going to move right on, but obviously with the Australian dollar, we do want to reference this. RBA governors Philip Lowe on Thursday underlined the bank's easing bias by saying rates would stay low for longer, given the board's was strongly committed to get inflation back into the 2 to 3% target range. Okay, here we are with the bias chart, and let's go ahead and let's go and take a look at the euro. Since the euro was able to keep its head above 111, albeit with the help of $20 billion in options at the 111 mark. Despite Draghi's best efforts to keep the pair down, the pair saw a short covering squeeze that eventually lost steam, dropping to sub 1130. Upside resistance is 1185, and downside support is 1079. You can see here we found ourselves in a long-legged doji. And generally with the long-legged doji, bears don't have control, bulls don't have control. We finish smack dab in the middle, but generally means the market is a little bit exhausted and we can, look the other way. I don't know about that. In light of what all has transpired. Let's go back here into the 2-hour chart. I do like that 1185. That was the highest from yesterday. I mean, I like it as far as seeing its resistance because we can easily see a little bit of a short covering. Let's say the GDP comes in weaker. We can see this thing come up, but it's all about 1185 at this point. I thought we could even push even a little bit higher yesterday, but it'll be 1185. And 1079 on the downside will kick off 52. I don't think we're going to see that today, but there's certainly, I believe there's that potential. Okay, let's go and move into the cable. Cable's early rally post ECB faltered with a late day slide on the backdrop of overall dollar strength. Support comes in at 124, followed by 23.35, and you can see this here. You see the 23.35. It's 127% extension of this area. That'll be, I think that's where the market can get to, but for right now, support is going to be. We'll go with the 124 for now. But if we do go on and break that, I think that's where they're going to, 23.35. Upside resistance it states is 25.02. Well, now that, if you look at this, that might be a stretch here. Right there at 24.83. You can see that. We'll go with that. Right there, you see the closing right there. 24.83 on the upside. Well, this Aussie has really come under some kind of a pressure. Look at that. It's even taken out to 69.44. I mean, I guess at the close of the week, they're really pressing anybody. So let's say, the market had done really a great job when it finally was able to bust above 70.27. The door was open for us to move higher, eventually up to 71.80 with this technical close. So anybody that said, oh, I'm going to get long here, or they said, you know what, I'm buying on a dip. So they picked them up at 70, which is not bad because that was 70 pips off the high. Or they came in at 69.80. And look, they're really pressing them here. So as we close out the week, I would expect now at this point, obviously the pressure is going to remain because they've got those people under the gun. They'll want, and so even if you were long, even if you like the Aussie, you'd say, I'll wait because I'm gonna wait till these guys and gals all get knocked out. Because look at it this way, anybody who went long this week, anybody is in the red right now. So, like, if you like the Aussie, why would you buy the Aussie? Then you're like, no, I'll just wait. Let these people sell into these positions, and I'll be right there, and I'll determine when I want to come in, or I'll wait till next week and come in. So at this point, support would come in right there, 69.27. We're just about there. So. Boy, this thing is really giving up the gains. But obviously, like I said, with Philip Lowe saying, hey, rates are going to stay low for longer, that certainly has turned things around for the Aussie, materially changed things around. Let's go and take a look at resistance. Boy, look at that. Look on this 2-hour chart, boy, you see the extent of this move. And, we know the importance of the 69.44. So you can see as we broke below that, that just accelerated some of the losses. It may not be considered acceleration, look at by the amount of pips, but you can see here it's just a quick drive low. There isn't, let's say a gently working low, which is a quick push. On the upside, resistance will come in right there, 69.75. Definitely in the short haul. Now it's under bearish at this point. It'll have to prove itself. Let's go on and move on to the Kiwi. Kiwi was doing a stalwart job of holding above this pivot, and it's even started to slide below the pivot. Okay, and for the Kiwi, we know the Kiwi is doing its best to defend the pivot level of 66.16. And that's actually 60 right here, 66.60. But it's actually dropped below that. A daily close will open a range. A daily close below that will open a range down to 65.75. And we're certainly seeing this market trying to move lower. Let's take a look on the 2-hour chart. Not very far away from that, too. This is some good support here. 66.39, so just about 7 pips away. On the upside, well, you can see that clearly, 66.86. And let's go move into the dollar CAD. Well, we've talked about this as the potential for this to get up to 31.90. And the market's been holding up very well throughout the week. The dollar CAD closed at new highs on this run up, and the pair is still eyeing 31.90 before a significant pause. Downside support is 31.20, and we've gone at length whether it's on here or on the daily roundup, so we won't stick any further about the defense and the pullback and how it's held up 31.20. So 31.90 is our going to be our bias chart resistance. Still bearish, certainly isn't bullish. And 31.20. On to the peso. The dollar peso relinquishes gains, leaving bulls to wonder what happened to the solid recovery off of 1892. The market may want to slide lower to test the remaining stops. The downside support is 1886 on this break, with upside resistance at 1908. And that's where we stand. We'll mark off the 1908. Now, if we break lower, I think we'll get to 1886. But for right now, short-term support is going to be that 1898 on short-term support. And with that, we'll move into the cash dollar index. Boy, look at this dollar. It is just something else. what I'm saying is, no matter what you throw at it, it just keeps wanting to push, higher. Um, the dollar index broached the major 97.89, closing just below. Market appears to be poised to pounce on an opportunity to challenge the highs of 97.38. With a 25 basis point cut priced in, the risk is the index closes at the highs next week. Support is now 97.45. And we'll mark this off for the 97.45, although that seems like that's almost like a long ways off. So we've got the 97.45. This thing looks like it wants to rip roar going ahead. Let's look at the 2-hour chart. Like I said, it wouldn't surprise me as this thing takes out its highs and, right, spitting in the face of the FOMC. So what we're looking at for resistance, we'll go with 98.12. There we go. On the GDP, if for some reason it comes in stronger, I think we can go and punch up there to that 98.12. Certainly it's back on bullish. We'll go on and move into the Kiwi end and the cross rates. So Stacey said the QEN has continued to ease back after the gravestone doji on Monday. Support level is 72.25 is providing some short covering, and we're just below that now. As we press a little bit lower, it's honestly this isn't even holding up that bad if when you consider, the Kiwi overall has been weaker, but even the Kiwi's holding up. It's the Aussie which is really getting beat the heck up. So we're going to stick with the 72.25, or at least that's what market as our support. 72.25. Hang on. We actually had that from yesterday, 72.25 right here. And upside resistance is going to stay the same. That's going to be 72.68. And the market still is going to remain, for now, it's still bullish, even though we've seen a decent little pair back. We'll move into the euro yen. Here, the euro yen saw a strong bullish engulfing bar that took out the week's high. Upside resistance is 21.50 with support at 20.74. So here's that, if we were to push up now, we really turned this thing around. Potentially, we could have gone down here, which is to 1984, which is the 88% of this entire move of 1883 to 2748. We saw quite the turnaround. Quite the turnaround it was indeed, because look at this. Look at this here. Wednesday, Tuesday, Monday, Friday, last Thursday. I mean, we pushed higher, but I'm saying we closed. Look at this. We took out 1, 2, 3, 4. So market still has the opportunity to squeeze a little bit further. if we do, and certainly that would take us up here. The challenge would be 2150. We're a ways from that. We'll take a look on an intraday what we'd be looking at as far as resistance. Certainly we tag this level here, and we're going to have to leave it right there, which is going to be 2136. Leaving it right there, meaning the pink bar, you see that resistance come in. Support now comes in up in here. It's 2072. 2072 for support. Well, we referenced, the continued weakness in the Australian dollar, really across the board, and we're seeing the euro odd continue to move higher. The euro odd continues to rebound on the backdrop of Aussie weakness across the board. Immediate resistance is 60.75. Well, folks, we're right there right now. Support's going to be 60 even, so there you go. We're going to go 60.75. We're right there, 60.75, just as we speak. Support, let's go into within the 2-hour chart. So with the Aussie weakness continue to push into the close, I would think if we go on and do just that, it doesn't seem that we'll pare back very much. So it's going to be 60.25. We're easing back. We're right here, right after 60.77. It's going to be 60.25. And let's go move into the Euro Kiwi. Well, as we mentioned, the Anapodian currencies are certainly under pressure. Seeing it right here with the Kiwi. Also, the Euro Kiwi continues its rally, but resistance is close at hand at 67.78. Wow, same thing here where we're pressing. And a pause is expected. So we're coming up right here. Well, not too far away from we're at 67.56, but we're looking at 67.78. And for support, let's take a look here. 67.03. Well, that's still a ways down. We've had a pretty good move up here. Well, for today, we need to move this a little bit higher. Let's go with 67. And certainly, I don't expect things to turn around at this point, but we'll go with 67.19. Still a ways down. $67.17. With that, we'll go and move into the Aussie yen. Certainly pressing a little bit lower here, but the 75.20 has been holding. But we'll give it the benefit of the doubt. But moving on to the LCN. So the LCN is marked in a 35 pip trading range the last couple of days. Downside bracketed by 75.20 with upside resistance at 75.70. Certainly looks like they're going to press the 75.20 here. But we're going to go and list this as our bias chart support here. We'll take a look at it. A little bit closer look on the 2-hour chart. And you can see right there. So we'll go with that 75.20, maybe into down. And there. Yeah, it's coming in right there, 75.20. So that's for today, though, we'll edge this down here to 75.58 for resistance. And let's go and move on to the guppy. So the guppy's found a mild bid throughout the week. Resistance is 35.48 with support at 34.57. I mean, we're kind of easing back just a bit here from those highs. Kind of slip back here. Resistance, at least for today, will be 35.41 right there. 35.41. And we'll tighten up the support for today. I'm calling it 34.78. And lastly, with the sterling nod, well, we know we had generated this buy signal several days ago. I think it was either Monday, it might have been Tuesday, but I know that I believe it was actually on Monday when we got this. We certainly have seen quite the run up here with the sterling nod on this. We actually the run up was good for a little over 200 pips. So the sterling nod, after generating a buy signal via the exponential moving averages 3 days ago, has seen a 200 pip rally at the hands of the overall weakness in the Aussie resistance of 79.50. And you can see that right here. We just tagged it right there, 79.50. So there's our bias chart. It's going to be our bias chart resistance of 79.50. Had 53 before, we just moved it 15. And support is going to be 78.89. There's the bias chart for today. And let's go move back into the main screen. And these markets are simply marking time for the most part until we get to GDP. Look at the dollar CAD on its way. That's been our target for the most part of the week, which is the potential for the market to move to 31.90. And it certainly looks like that's exactly what it's doing at this point here. Other than that, everything is relatively quiet. Thanks for joining us here on the European crossover. And I'll get that bias chart posted into the room.